Presented by Policy Bazaar.
CNBC TV 80, the Policy Bazaar Insurance Show.
In our special series, the Policy Bazaar Insurance Show, we've extensively focused on securing the lives of you and your loved ones. The message so far has been, jaan hai to jahaan hai. Now in this episode, we're taking the next step. While securing your jaan, which is your life and your health is vital, it is equally important to secure your jahaan, your home, your business and your livelihood. Today we'll dive into the world of property, fire and accident insurance. And as always, the best people in the insurance industry will help us make sense of it. We're joined by Sajja Praveen Chaudhary, Director, Policy Bazaar for Business, also Shashikant Dahuja, the ED and Chief Underwriting Officer at Shriram General Insurance. Let's start with, talking about the topic itself and come to you, Mr. Dahuja. As far as insurance for business is concerned, a recent survey suggested that 70% of the MSMEs have faced at least one risk in the last 3 years. Yet, less than 20% of them have an accident insurance cover. The reasons are many. Some think that they are compliant with fire regulations. Some think that they are not in a calamity-prone geography. Some hope that thefts won't happen. Despite all of these things, what, according to you, is that one good reason, according to you, for having a comprehensive accident insurance policy?
So I'll start with the word called risk. So the only thing I think which is unpredictable is risk only. And I think nobody knows what is going to happen next. Now, whenever we take insurance, I think we take insurance for our families, for life insurance for our families. Generally, we take insurance for our vehicles also. But when it comes to our business, we generally overlook that. So that is a reality. Now, we don't realize that the kind of income we get from that kind of business, through that business only we are getting income and we are able to pay our life insurance premium, our car insurance premium, and we overlook it. Now, those who say that maybe nothing will happen to me or nothing will happen to my business, now for them, I am having few examples. I think we have an example of Mumbai floods, which happened, I think, in 2005, wherein maybe around 50,000 worth of economic losses happened at that point of time. And insured losses was only maybe around 10%. 90% were uninsured. Maybe at that point of time, those people from Mumbai have not thought about it, that this flood will happen in Mumbai. Now, we have a recent example of Chennai floods. Again, there was maybe around economic losses of around 40,000 crore. Again, the insured losses was around 5 to 10% only. So it is a perception that it is a myth that nothing will happen to me. But you never know what will happen. Maybe a cyber attack may happen to your business. Maybe some sort of short circuit may happen to your business. I'll give you my own example. I sit in Jaipur office, my head office. Near to my office only, in 2009, a bigger fire happened in 2009, Indian Oil Depot. And my own office got blast. And we took around 6 months time to reinstate that office. Till that point of time, we have never thought that maybe this will happen in our office only. So this is the reality. Nobody think about taking insurance policy for their businesses. Although we take insurance policy for life insurance or for our car insurance, maybe for our two-wheeler insurance, but when it comes to our business insurance, as you rightly said, that maybe there are around 60 million MSMEs, or maybe more than that. I think maybe good number of MSMEs are there. Around 95% are uninsured. So this is the reality.
Sajja, I want to come to you with the next question, and this is on behalf of all policyholders looking at fire, accident, a home insurance policy. Just to sort of put these three things together, fire, accident, or property or liability for that matter, are these just different names for a similar kind of cover or similar kind of policy, or do they sort of serve different purposes? If you could help our policyholders understand that better.
Sure, Yash. See, Yash, basically, when you're looking at any business, right, primarily, I think most of the policies that you spoke about are related to business owners or businesses as such. Now, when you look at business, there are different kinds of risks that a business person or a business would entail or would have. One is with respect to, in case, let's assume they have an office or they have a storage space where they might be, if they're into trading of some goods, or they might have a factory as well where they must be manufacturing something, right? Now, anything can happen to any of these locations, like as Shishkant just said. That is primarily property insurance that you speak about, in order to, whatever in whichever format that you speak about, whether it's about office package policy or whether it's a regular fire or property policy, which you might take for your, combined all your spaces put together, whether it's your storage space plus your factory together. What does this cover is primarily any kind of fire and elite perils, like, fire, floods, and so on. So forth. They're about named about 11, 12 perils, and these are covered under that. And apart from that, obviously, you'll have certain add-on covers using which, you can take on certain additional covers like business interruption cover and all of that stuff in case of some smaller incidents happening also. In case you're getting any kind of loss because of business interruption, even that can be covered kind of. Then there is the next segment, which is primarily called as liability kind of segment. The liability segment covers any kind of third-party losses that might happen due to your business or your product, or any suits that might arise on your directors or your employees because some product or some process, or let's assume whatever that your business that you're running today, kind of, right? And then there are things which are like cyber policy. Cyber policy, as you would, as the name says, and most of these, I think people hear it most of the time nowadays. It takes care of any kind of cyber incidents that might happen within your company or with your organization, where it's in terms of any data breach or any kind of, fraud that might happen due to a kind of cyber incident that would happen. So there are different kind of policies under liability, but primarily these policies either take care of any loss that might happen to the third party and they might sue you, which is the case of D&O or say errors and omissions or a product liability policy kind of thing. Or in case of cyber policy, any loss that is happening to you because of data breach or a cyber incident and so on and so forth. So these kind of cater to different kind of risks. And similarly, there's one more or two more categories that would say, like, a marine insurance or a transit insurance, where let's assume you're transferring goods from one place to other place, or you're transporting your goods from your factory to, say, the retail outlet, or you're transferring it to your partner, kind of, who might be buying it from you. And if something was to happen between, like an accident was to occur, or if some theft is to occur, and then you had loss of goods or certain things that's happened, or a risk of that sort that occurs, then this policy would take care of covering that risk. So there are different risks that are there for a business, depending on what business are you into, whether you're into transporting a lot of goods, or whether you're going to be stationed in a particular office, and that office place is the only place that you have, or do you have any other manufacturing facility as well. And third thing being whether you have any losses that might come because of a third party suing you, or by or probably a cyber incident occurring with respect to your operations, kind of. So depending on that, different policies trigger, and different policies would take care of those particular risk incidents, kind of.
I mean, thank you so much, Sajja, for sort of bifurcating these different kinds of policies, which, in a way would be sort of affecting one part or the other part of your business operations and will be very helpful. But to Mr. Yu Dahuja, another very important, question which policyholders come across while looking for an accident insurance policy is two different sections under these policies. One is, of course, the contents as well as the structure. Help us understand what do these two elements mean, and who should go for contents plus structure, who should go only for contents, or who should go only for structure?
Oh, I'll explain with an example. Suppose if I am living in my own house, and because I am living in my own house, that building is with my name, even the contents belongs to me only. So ideally, I should purchase a policy both for structure and as well as for contents also. When I say contents, it includes your all kind of contents. It could be your books, it could be your clothes, it could be your household goods. Anything which is there in your house are called as contents only. Now, if I am living in a rented accommodation, now that building does not belong to me. Maybe that building belongs to someone else. So why should I take insurance for that building? Because I am not the owner of that building. In that case, I should take an insurance only for the contents, because those contents belongs to me. And for that building insurance, the owner should take a policy for that building insurance.
Sajja, one question to you, and this is with respect to moving forward with our discussion. This is to give further clarity to policyholders, specifically looking to insure their business assets. What should he or she keep in mind when it comes to getting the right amount of cover for insuring their business? How does one understand what is the right cover, and how should one go about valuing, let's say, the the goods, the machinery, the inventory that they have?
So basically, in a property insurance policy, if you have to speak about primarily property insurance or a fire insurance policy as such, as I said, while most of this is tariffed in nature, there are few insurers where, especially for SME policies, the few insurers where they're able to kind of give some discounts in case, let's assume you have additional security or which might lower the risk. Like, for example, you're having fire extinguishers in place, or you having CCTV cameras in place, or you being in a place where there is a security guard available, which means there's a slightly more security available to the property, and hence the risk is lower. Basis that there are few insurers who give you a slight discount on that. That can help you kind of reduce premium definitely in that scenario. The second part of it is that if you're a large property owner, or someone who has a large manufacturing facility or a storage facility some of these policies also have a pricing element basis the claims that you would have had in the past. So it is very important that you ensure that your policy runs claim free, so that when it comes up for renewal, you're not ending up to kind of being required to pay a very large premium, because obviously the insurer can load the premium basis the past claims, and that's general practice that happens in the industry, right? Because there's a higher risk that is seen, and especially if this risk is being seen multiple times happening over multiple years. Yeah. The other thing that you might have is that there are insurers who would also value the multiple portfolio or multiple policies that you would have for your entire business. So at times, what we've also seen is that if you have the entire portfolio of the particular insurer, one of the policy might be running into losses for them, but the other policies might not be incurring so much of losses. And as a result, insurers are also able to take a combined call to say, okay, at the overall portfolio level, we are able to price you slightly different compared to only pricing with respect to that policy, right? So this is the other thing which comes into picture, and hence you're able to kind of save a bit on your premium. Or ensure that your premium does not rise in the coming years.
To you, Mr. Dahuja, apart from getting a claim for business assets because of an incident of fire, let's say, or any other natural calamity, there could be a lot of business disruption also. If there's been an incident of that nature, do insurance policies which cover business risks also sort of take this under consideration and compensate the policyholder for the period of business disruption also? And how does it get evaluated that what could be the value of business disruption that you could have during that time?
Yes. I think if you will ask from me, like, which is the most important policy which any business should have, no doubt that any business should have a basic fire insurance policy with them. But the most important one is this business interruption policy. And you can also call it as fire loss of profit. Now, what happens now in this policy, I'll tell you. Now, suppose if I have taken a basic my fire insurance policy, if any of the peril, it could be fire, lightning, explosion, any of the peril trigger in that particular policy, and I'm not able to run my factory for the next 2 months' time because the fire has happened in that factory, I'll be losing my profit for those 2 months. Or maybe there are certain fixed expenses, whether I work in that factory or whether that factory is not operational, those fixed expenses will remain same. It could be salaries of the employees, it could be rent of the building, it could be maybe you are paying EMI with the loan which you have taken. So if you take this cover, if you take this policy, business interruption policy, along with your basic fire insurance policy, the insurance company will come forward and will give you that particular loss of profit also. Now the main thing here is that insured has to select the indemnity period at the start of the policy. Maybe you can think about taking 3 months indemnity period. You can think about taking 6 months indemnity period. So now, up to that period, if your factory is not operational, insurance company will compensate you on the basis of your what kind of profit you would have earned if this factory would have been operational. This is the most important, I think, cover which everyone should have, I think.
Understood. No, absolutely. It's a very important rider that one should certainly consider, considering the risk of business disruption as well. But, on that note, let me just say it's been an interesting discussion so far on how one should go about securing their business. On the other side of this very short break that we're going to take, we will discuss things which one should keep in mind while insuring their homes. Very interesting discussion lined up, some interesting questions lined up on the other side. After this very short break, we promise to continue with that discussion.
CNBC TV 80, The Policy Bazaar Insurance Show. CNBC TV 80, The Policy Bazaar Insurance Show.
Welcome back to the Policy Bazaar Insurance Show. Now, we as Indians sometimes work for our entire lives chasing just one goal, the goal to have your own home. On the contrary, we as Indians hardly do anything to protect our homes. I am not the one saying this. A recent data showed that home insurance penetration in India is only at 1%. What are the reasons? Where is this gap coming from? And what can one do here? Let's get this discussion started. To start with you, Mr. Dahuja, do you only have to buy a home insurance policy if you reside in a geography which is prone to calamities? If not, then what is that one good reason, according to you, why everyone should look at a comprehensive home insurance policy?
If I go by the figure, like 99% of the houses are not insured in India. That is an alarming sign. Now, if you will compare this figure with other countries, now we have a data of USA wherein the 94% of the houses are insured. We have a data of Japan, wherein UK, wherein that maybe around 75% of the houses are insured. The same way in Finland also, more than 70% houses are insured. But when we talk about India, 1% of the houses are insured. We feel that no, nothing will happen to my house. Now, it is very important for everyone to have a home insurance policy. And if you will see the premium part of that, it's very, very, very economical. So home insurance, when I say home insurance, no doubt there are few reasons also why people are not getting policy for home insurance. Maybe they take only policy when they are taking loan from the bank, because bank has make it mandatory. You have to take an insurance policy, then only take. Otherwise, they will not take they will not got approval of their loans. So one of the reasons is that. The second is that maybe there is lack of awareness.
Sajja, I want to shift, this entire discussion to the next point. Now, what are the top 5 things, according to you, that an individual should consider before he goes ahead and buys a home insurance policy?
So, yes, basically, in terms of, say, when you're looking at an individual home insurance policy, one is with respect to coverage. That's one of the important things that you should look at. What is the kind of coverage that you're taking? Whether you're taking only a structure-only policy, or whether you're taking a structure plus content or a content only. If you're one, as earlier Jaan said, if you're rented place, then ideally you take only a content-only policy. If you are an owner and who has rented your house out, you would take structure-only policy. If you're an owner who's staying in the same house, then you look at a structure plus content policy. Having said that, the other part which most of the times people would not have seen in the past but are available these days is kind of any kind of machinery breakdown as well, which has started to get included in the home insurance policy. The second part primarily is about whether you're kind of looking at any kind of deductibles within this. There are policies obviously which will have certain deductibles, for say a replacement of content, or let's assume in case of a breakdown kind of thing. Do you want to take a deductible right now and get some discount, or do you want to cover it to the maximum possible so you need not bear that when that loss happens? So the second part. Then comes the part of whether you're taking a long-term policy, or how do you want to do it? You want to kind of renew it every year, or you want to have a long-term structured policy in place, or how do you really see that? The fourth and foremost important part, which at times people miss out, is the sum at risk or the sum insured, the cover value for which you are going to insure your house or your content. So there are different bases, right? One is basically a reinstatement value, which is if you were to kind of rebuild or whatever it is, what is the cost that come up. The other thing is, at this point of time, a depreciated value. What is the basis of what you're covering? So that is also there. When you're applying for it, you can clearly choose that as well. And basis that, your premium also gets decided. The last part being, when you spoke about insurance company, and especially in case of health insurance, the way I think people have over a period of time come to understand what the claim settlement ratios and all of. And similarly, in the case of, say, overall insurance companies, there are certain claim settlement ratios, while home insurance per se is a slightly smaller segment today. And hence, you might not have exact numbers only with respect to the segment. At the overall level, how is the insurer performing in claim settlement ratio? And some people might have their own personal choice of brands as well, right? That might decide what kind of company might you want to go with and not go with. But the other part is, there are also companies, when you're covering content, there are companies who are also today providing you basis a very minimal documentation at the time of a claim. So these are broadly the 4-5 things that you should consider as an individual house owner or a content owner when you're kind of trying to insure, or when you're trying to take a policy, to choose what would suit you the best.
Sajja, very quickly, I just want to understand and just throw some numbers at you. I mean, if for a home insurance policy, somebody wants to take a cover of, let's say, 50 lakhs sum assured. What could be the tentative premium that he or she will have to pay for a 50 lakh sum assured?
Yes, but I think a very basic policy can start about 1,000 to 2,000 rupees, not much of a cost. If you're kind of covering only the structure only kind of a thing. But let's say you're taking a 50 lakh rupees structure plus you want to take some content. What we've seen is on average it might trend about roughly 4,000 to 5,000 rupees kind of thing. But as we said earlier, there are also the other add-ons which come in where you can take care of breakdown of machinery and other stuff. When you start adding that, those are slightly costlier in nature because there's these can happen at a higher frequency in terms of the number of incidents that happen, and hence the premiums might shoot up to say at 12,000 or 15,000 rupees. But again, depending on what you want, you can kind of choose anywhere between that 1,000 to say that 15,000 kind of thing.
Final question as we wrap up this discussion to you, Mr. Dahuja. For any individual who's filed a claim for a home insurance policy, what is the tentative amount of time that it would take before he gets his claim for the damages or for his requirement through that insurance policy from the point that, a survey happens for the damages to the time the report is filed with the insurer, to the time the insurer assesses the report and settles the claim? What time would it take for this process generally where there is no objection or any deviation that a policyholder should expect?
Now, if you will go by the policy wordings, it is clearly mentioned in all kind of policy wordings. Okay, now as soon as the loss comes, it is insured duty to intimate the claim to the insurance company. And as soon as the insurance company gets the intimation, it's the duty of the insurance company to appoint a survey within next 24 hours. Now, once a surveyor is appointed, it's the surveyor duty to provide a survey report to the insurance company within next 15 days. You can't take more than 15 days. It's the regulator's guidelines given in the recent master circular. Now, once the surveyor has given the report to the insurance company in the next 15 days time, now insurance company has to take a decision either to pay the claim or either to repudiate the claim. Or if some queries are there, insurance company can raise those queries, but within next 7 days only. You can't take more than 7 days time. If you take more the time, then insurance company that insured can always go to different, you can say they can go to IRDA, make a complaint against the insurance company. If the insurance company again say, no, your claim is not payable, then they can go to ombudsman, then file a complaint against ombudsman. There are many ways insurer can approach for that particular claim.
With that, we'll have to wrap this very interesting discussion on insurance for your business, insurance for your home. As I had started by talking about insurance for your Jahan and how to go about that process. Thank you so much, Sajja Praveen Chaudhary, as well as Shashikant Dahuja, for sort of submitting your views and advice to all policyholders in terms of how should they navigate this side of insurance. But with that, as I said, it's a closure on this episode of the Policy Bazaar Insurance Show. We will return soon with another interesting episode, another interesting topic, and a new set of experts to help you understand that side of insurance. Till then, stay safe and stay insured.
CNBC TV 80, the Policy Bazaar Insurance Show.